Now, on to the big story in Kenya. The banking sector is in unknown territory. That comes after President Uhuru Kenyatta signed into law a new bill that effectively caps retail lending rates. Now, bank rates will be maintained in a narrow corridor, 400 basis points above the central bank rate and about 70% of that same benchmark figure. Now, that applies to deposit rates. Despite absolutely spirited lobbying by financial institutions, President Kenyatta maintained the commitment to bring down the cost of credit was not convincing. MPs sparked a firestorm of controversy after they passed a bill earlier this month. Some analysts, however, argue that unless the government reduces its local borrowing, access to loans for the ordinary public and businesses may become a lot more difficult despite this law coming into force. A little earlier, I sought reactions to the decision to assent to this bill from Ali Kansachu, the CEO of Rich Management.
I'm pretty taken aback, I've got to admit. I'm pretty surprised. I did not expect this. And I think what the president has done is looked through and seen a political situation. Probably felt that if he did not sign the bill, it would come back to him with a super majority and he'd have to accept it anyway.
Because we're essentially 12 months away from an election now.
That's right. Yeah. And I think, we're in a new post-Brexit world and politicians are much more cognizant of political realities. And I think that's what's informed this decision. But I don't think it's a good one. I think
the bill does have some interesting points to it. There are very interesting clauses on consumer protection. Where, for example,
I thought that was the way forward. Yeah. Better information, better pricing and understanding of what the loan was actually costing you, a banking ombudsman, pressure on the banks, because the collateral damage is going to be substantial. Our banking sector, which really is part of the national interest, it's expanding in the region. You can imagine every country, you could just imagine what President Magufuli is going to do. It's good enough, caps are good enough for you, caps are good enough here, right? You're going to have this all over the place. The Eurobond price, all of a sudden we're backtracking from our free market credentials. How far are we going to backtrack? You just have to look what happened with the Rand today, with Gordon coming under pressure.
Yeah.
So, markets are skittish and nervous, and we are much more integrated into the regional markets, as a consequence there, and the international markets, where we have Eurobonds being priced on a continuous basis. I dread to think what's going to happen there.
Speaking of things that might happen tomorrow, we've just, before we came on the air, we've been looking at a couple of bank stock prices here. Every single one here, especially over the last 12 months, has been absolutely hammered. Yeah. Everyone from CFC Stanbic down about 16%, Barclays shares down 30% in the last 12 months. Then you've got outliers like National Bank with all its governance issues, down 60%.
That's right.
But when the markets open tomorrow, all of these guys are going to be in the red, aren't they?
Well, who's going to be buying it at this point in time? I mean, I can imagine that lots of people will want to be selling it and reducing their risk and their positions because of the uncertainty around the situation. So it's a very unfortunate situation, I'm afraid, for the stock market. It's an unfortunate situation with these bank stocks because, a lower equity price impacts the bank's worthiness and it impacts it very quickly. You can see that across the board anywhere in the world. So difficult situation. First point of transmission correctly, in my opinion, is going to be the stock market tomorrow. We've got to watch these banking stocks. Another point of transmission is going to be the Eurobond, which is out there, which we have to keep an eye on as well. And then, the real point that we got to come back to is what's going on here. If you look at all the results we've seen recently, the banks have already started to reduce lending to you and me. Yeah. They've increased lending to whom?
Exactly,
the government.
They've all, now, basically, this creates a perverse incentive problem, doesn't it? Because
from a capital point of view, and a credit point of view, you just carry on lending to the government all day. Their interest rates are set by the market. They're not going to be able to set them. They're setting those. There's no cap on what rates. So you're better off going in that direction and reducing the fact that you've got to lend at a very low rate, possibly, to credits you might not think were worthy of those rates.
In theory, we haven't seen the final version of the bill he's signed here, but in theory, this applies to all existing debt right now, doesn't it?
So it's got to reprice everything.
Yeah.
It reprices everything. And I think, I'm afraid, given that we've seen a deposit flight to quality post-imperial.
Post-Chase, post-imperial, yeah.
How are these small banks going to lend at this rate? I don't get it.
And of course, we'll put up the entire conversation online. YouTube.com/CCTV Africa is the place to look for.